following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Morning, folks. Tommy O'Brien. My dad is out today. He will be back tomorrow morning. I am lucky enough to be joined by our man Basil Chapman this morning as the Dow is down 175, S&P's down 22, NASDAQ's down 40. Basil, good morning.
Good morning to you. How are you?
I'm doing well. Thanks for doing the 10 a.m. update. I was listening. That was very informative. That's a great 5 minutes usually, and thanks for filling in. That was awesome.
I was just commenting in the den. Tom gets an incredible amount in that 5 minutes.
It's an awesome 5 minutes, and you did it justice, man. Thank you.
Thank you.
Definitely. So, as we do every day, let's start it off. We have our man Kevin Hinks on the line, live from Chicago for TD Ameritrade Thinkorswim. Kevin, Scott Connor, 12 noon every day, the option hour on TFNN. Kevin, good morning to you.
Good morning, Tommy. Good morning, Basil. How's everything going?
Everything's going well, man. We have some action in the markets, that's for sure.
Well,
how you doing over there?
We're doing well. We're doing very well. You know, it's interesting, Tommy. We're entering now the Fed quiet period.
Yes.
Right? Ahead of their meeting. And Lael Brainerd did like a mic drop.
Right? He made use of the final minutes for sure.
Yeah. I mean, you know, I talked about this yesterday on Swim Lesson. Something was going on because her speech was not really on the calendar or on the docket, and they kind of rushed her in to do this speech.
Interesting.
And all of a sudden she comes in right before the quiet period and just drops a bomb on the market.
Okay.
So
interesting, yeah.
I thought it was very interesting.
That is.
Yep.
And of course, the market reacted, man,
yeah.
in a big way.
And really, in reality, though, she didn't tell anyone anything that we weren't thinking anyway. That I personally don't think they're raising rates in September.
Sure.
I think they'll guide towards December, and they'll talk very hawkishly, but they won't raise in September. And that's kind of just what she said.
Yeah, because, you know, the Fed's job is to provide basically stability. The last thing it wants to do is surprise the market, right? And that would be pretty surprising for sure. I mean, I think a lot of people would agree with at least that the market would be surprised if a rate hike came at us next week. I mean, that would be startling for sure.
I think it would surprise the markets, and if we've known Janet Yellen for one thing, she doesn't want to surprise the market.
Yeah, we'll find out if that's ever going to happen.
Also,
right?
politically, with the market right now, having had that 400-point decline on Friday, they are very aware of what the public, how nervous the public can get. So I don't think that it's even on the cards that they do anything abruptly. They've been so slow to do anything. They had opportunities. And not only that, you have to put it into the context of isolationism. You can't just be the only one that suddenly raised rates in a market that throughout the world is having competition for lower rates. There's a big decision to be made here.
Sure. So, Kevin, what are we talking about on the program today as we have the markets down 1% pretty much across the board?
Well, today we're going to talk about really one of my favorite things to talk about, and it's going to be a strategy that we like to call stock replacement, or it's in the calendar spread diagonal family, but it's really, instead of buying stock, we're going to show you how to buy stock for basically 15 cents, 15% of what it would cost to trade a high-price stock.
Fractions on the dollar.
We're going to show you the strategy. Yeah. It's always a great discussion to have, kind of an eye-opening discussion. So we like to have these every now and then.
That's one of those. I was just going to say that's one of those magnificent powers of options, right? In terms of you really able to control and get some serious movement of an underlying, whether it's a stock or so forth, for fractions on the dollar for sure.
Right. Exactly.
Good. Perfect. Well, listen, 12 o'clock, folks, live right here, TFNN. Kevin Hinks, Scott Connor. Kevin, thanks so much, man, and we look forward to the show today.
Always a pleasure talking to you.
You too, man. We'll talk to you tomorrow. Awesome.
Bye, Kevin.
So, Basil, what are you looking at this morning? That was a great 5-minute take, but maybe just fill us in on in terms of market action, your newsletter, what you're looking at, and kind of what you're looking for. I heard you talking about that those Dow levels are important to hold, of course. But going deeper than that, what are you looking for?
So there are a couple of things that I look at. Right now, what I'm showing you is the 10-minute chart of the E-mini.
Okay.
And you can see that there was this rally. There was like a flat base that was made going to the low of 8:20 in the evening on the 11th.
So we're looking at basically overnight, 2 nights. Okay, yes, that's Friday's decline on the left, of course. Okay, and that's
right. And
Monday,
now and then Sunday night you try to get a bounce. It fails, but it's holding very well. And then suddenly you get this move to the upside. I call it left side, right side price time match. Took you to the highs on the left side at about 240 in the afternoon of the 9th, around about the 2139 area, and it held. It went there and then it went sideways. And then there was that news after my show at about 1 o'clock, which spiked the next level in the Dow, in the E-mini and the Dow.
Yes. And was that the Fed speech, right? Was that
must have been the Fed speech.
That's what we were just talking about, I think.
Time.
That was those comments. Yes, go ahead.
And I'd already drawn in this side here, which it met exactly, and that was the resistance in this little cluster formation.
Okay.
But what's really important for me, there are a couple of things. So we've been short since the 12th of August in the short the Dow.
Okay.
We had a 3 times short position, which we got stopped out with a nice profit yesterday. It's a pity we just got stopped out. I really wanted to be holding that longer, so we're going to be trying to get back in today. Most importantly, we're still short the Dow. We're short in other areas. There's the music.
Okay, hold that. We'll come right back. Dow is down 200 points, folks. S&P is down 25. NASDAQ is down 50. Basil Chapman, Tommy O'Brien, come on back. We'll be right back. 3 minutes.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Basil Chapman, Tommy O'Brien. And Dow is down 180, S&P down 23, NASDAQ down 40. You got oil down about $1, $1.17, gold up fractionally. So go ahead, Basil, if you can finish what you were talking about, taking a look at some of those indices. Yes.
So this is what I'm showing. This is what I call the rudder, the 120-minute Dow chart. And this is what I do every day. I send out a number of charts with great detail as to where we are, what we're looking at. Here's this is my newsletter. The little square that you're looking at right there that I'm showing, that's the daily chart with all the commentary, etc. There's a big arch over it. But I really wanted to talk about the 120-minute chart. And I wanted to explain that an expression I have which says a rectangle formation can last a lot longer than your patience. And this is a 2-month rectangle formation that you can actually see it even better in the E-mini S&P because it trades overnight as well. But this is clear enough. And that gray patch that you can see over there, that's the trading band that we were in. We went short just over there based on the Chapman Wave. We're looking at peak D and E as potential turnaround periods. There was another spike the next day, and then the market started to come down. So this chart has unbelievable information as to what I use in the Chapman Wave methodology. So to make it real simple, we started this large arch formation, that red semicircle that you can see, that inverted H pattern or arch formation. We came down and we hit 1,800, and I think it was 3. But what happened was that 1,811 goes all the way back to the 7th of August. So that resistance...
Right before Brexit. Go ahead, yeah.
Isn't that interesting?
It is. And I was going to say, that whole consolidation is basically after it eclipsed where we were at above Brexit, right? You know, we recovered all those losses on, you know, right at the beginning of the left of your chart. And then right as we creep above that level, yeah, that's where it's like been up, pulled back, and that's an important level for sure.
And if you look at it purely, I love to look at the market as either pivot points or fulcrum levels, and we merely count each successively higher peak. And yeah, you can see we went to a D. D is where I start to get very cautious. Yeah, we went to a D, but then slightly higher E and F. And this is all the 120-minute chart. But there was a pattern that I said is very important. It's a pattern I really dislike because when you finally recognize what it is, it's kind of too late. It's called the head and shoulder pattern. This little arch is the left shoulder. There's the head, and there's the right shoulder. So you have to do other things to be able to be ahead of the pattern, because sometimes the pattern does what it's supposed to, but then fails. Failing meaning it bounces back above the neckline, and that's exactly what happened. So we broke down, and this is what I call a Chapman Wave single leg A syndrome. The reason why I call it a syndrome is that there are so many times on a news event, especially in the futures, but you see it in the stocks as well, or indexes, where there's a sudden news-related situation, and out of the blue, you get this whopping single leg A up, and then it fails.
Yeah.
Now, it can be beautiful because in this case, if it held support, and by this afternoon, we were actually pushing above yesterday's high, I would say that's a successful leg A going to a B. But at this point, we've broken all key supports. The Dow's it's now down 201 at 18,125. So this is really the syndrome that I'm talking about. That the single leg A, was an emotional move to the upside, and now it's starting to fail. And you can see it much better. This is live. And now you're pulling back. And there's that pink dashed line. I said to subscribers, watch out. I listed a whole bunch of details. In this case, I'm not showing the MACD or stochastic, but they were failing. And so the criteria now says there's enough evidence to say that, now I'm going to move this away and I'm going to go back to our major chart. So this is the Dow, INDU. And this is the Dow currently as we stand, and it's showing you, if I can just type it incorrectly. Oops, I typed it on the chart. I'll put it in there. Here we go. So the Dow itself trading down the 200 points. You remember a moment ago, the market wasn't as bad as it is now. And I was talking about the sandwich effect, where you got a big red candle, a big green candle, a big red candle. That essentially says to me that the weight of evidence is that there's far more selling pressure, because if it was green, red, green, I'd say, "Ooh, look at that." Now, if we go to the upside, you've accomplished kind of a V-shaped bottom. In this particular instance, we haven't even made a leg A from the sharp down move on Friday. So this is suggesting that if we take out the low of Friday, which is right there, 18,085 right there, then we're probably going to test it in that dashed line that you see. That's the one that went all the way back to just before Brexit as a key support level. Most importantly, I've got a down arrow in the weekly charts, which is suggesting that we are now in for more time and price consolidation to the downside. And you can see this dash trend line says that if the Dow closes the week under 17,950, there's a good chance that it'll impact the monthly chart, and we've got to go from there. I do think that we've got some time and a bit more price on the downside. I do have some targets in the mid-1700s, but I'd like to go one step at a time.
And what's interesting is 17,950, right? That's only about 180 points to the downside, and we're already down 200 points to the downside.
Which in a market like this,
yeah.
But we could also say any little news about interest rates or anything, and they could do it again to the upside. This is a very emotionally charged market.
Yeah.
I love to say, let's forget about everything else. The MACD, you can see here, I'll make it much bigger. You can see that the moving average, convergence, divergence, a set of moving averages, which I use as a more intermediate term, whatever chart time frame I'm looking at. This is more intermediate term because the stochastic gives you the quicker terms. But, I haven't got it here. What a pity. I had a chart. Let me get it because I think it's really worth looking at it. I'm going to move this away. I'm going to go to the Dow chart. Here it is. If you look at this light green on July the 20th, the Dow went to 18,622. That was peak C. Look at the MACD and stochastic, how strong they were. The next time we went to peak was the all-time high on the 15th of August at 18,668. And look how weak the MACD and the stochastic is. Look what happened just last Thursday. I decided not to go to, and look, we deflected lower, deflecting. So this is suggesting that the stochastic at 31% is probably going to go to the teens, and that's where we've got to start looking to see if there's strength at that particular point.
Yeah, I mean, with market action, 400 points down on a Friday, and then somehow we get, a rebound Monday that everything is so much better in the markets, and then to get a huge negative day, and we're only at, 10:15, 10:30 in the morning. So there's potential here. We've seen late day surges in both directions. As the market comes down. Jumping over, how about oil, Basil? Because we are getting some serious action in oil. We've had about, in the last 35 minutes, about a 75-cent decline just in that time.
So there are two things going on. Number one is that if you look at this chart, this is the daily chart. Let me just put this, make it bigger so you can see it in a broader context.
Okay.
That coral color line right there, that thick line, that's the 200-period exponential moving average.
Okay.
This light blue one here is the one that most analysts look at. To my experience when I've met with fund managers, they just pop. Most of them are not technical analysts, and they usually pop up the 200-period because it's the one that's it's the de facto one. It's a default one. So that's down here. The 200-period is the one that gives me the most information. Look how the price in oil was repelled from that. So I'll explain what's happening.
Okay, you can see those peaks bouncing off it for sure.
Yep.
All right, folks, come on back. Basil Chapman, Tommy O'Brien. The indices are down about 1%. Oil is down, and we're going to take a look at it when we get back right after this.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Basil Chapman, Tommy O'Brien. Dow's down about 180, and oil is hovering right around $45. And so let's look let's continue to break it down. Basil, go ahead.
So there's a pattern in my CD called Introducing the Chapman Wave Methodology, available at TFNN. There's chapter 17. There's a pattern that I call the dreaded H. The reason why it's a dreaded H pattern is, let me just move this over here, is that when the price comes down, if it rallies and makes an arch formation, or it could be like an uppercase A, but it comes back and it breaks the left side low decisively, it could keep going down, and it keeps doing that pattern. And then at a certain point, it perhaps might make the H, the lowercase h that goes to a lowercase m, which looks like a little worm. And that's where you're starting to find some kind of a base. So now let's look at oil. The pattern that we spoke about, there is a perfect, that's the H pattern. It actually made a little m and then broke down. There's another little one, and now it's making a much larger one, but it held very well. But within that, it's making, this is a daily chart I'm showing, within that it's making a little one, and that coral-colored 200-period exponential moving average is just a fantastic repair. And not only that, Steve Rhodes always talks about candles. Look at that little doji candle right there at the high, pulls back. Now what we're looking at is if crude oil, I go step by step. If it takes out yesterday's low of 44.72, you have to look for the next lowest low. But wait a minute, the next lowest low is the one all the way down at 43. So I like to go, as I say, step by step. So I would look at that level of yesterday, then I'd look at the level of the 7th, and just go one step at a time. At the same time, I had already drawn in a little while back, maybe, this is a daily chart, maybe 3 days ago, 4 days ago, I drew in this rectangle formation, and you can see that that rectangle formation will start to indicate that the H pattern is very much alive and well, and you've got to be careful that if you break that support, and that support is the one that right there at 43.84, you'll be going down. Now, if it takes out that low, then I have to take this arch, move it over, and say, wait, there's a much bigger arch formation being formed. In fact, I'm going to put this in and keep it there, and I'll show you. I'll do what I call a left side, right side price time match, and I'm only taking it to this level. Then I identify a candle that's most important. If I can't pick a top or a bottom, this candle is a little doji, a candle which is a tiny little plus sign candle, looks like a plus sign, tells me that there was indecision. I love that because it says that's a clue that at that particular point, if that candle up or down gets broken, it can give you even more information. So now I'll put this in, and that'll give you the exact, what I'd be looking at as a time formation. That says by the 21st of September, what are we now, 16th? So by early next week, we should be testing this low right here.
The 21st, that happens to be the day of the Fed decision, I think. Surprise, surprise. There you go. Perfect. A week from tomorrow, Wednesday.
So 41.83 will be very important, because if you take that out, that's very negative. If that's negative, now this is very interesting. If you don't mind, I'm going to put the correlation to the dollar, which is usually some kind of a correlation.
For sure.
This is the first time that I'm looking at the dollar in quite a while, and it's basically stuck. Gold and the dollar have been trading within a band. Then gold made lower lows, but the dollar hasn't made new recovery highs. It hasn't gone above the 96.25 level of the 31st of August. So the way I'm looking at it, the same way as we had a huge break. Tom and I were talking when I was interviewed by Tom last week. I said, there's this narrow trading band, the one I just discussed with you in the 120-minute chart going on for 2 months. I said, whenever we get a very narrow trading band, you have to think of it as Bollinger Bands, and the theory there is, as they get narrower and narrower, at some point there's going to be a very big spike to break either upside or downside.
Nice, yeah.
And the way I'm looking at the dollar is, I think it's within about a week or two of having some decisive action.
Nice.
My guess based on the dollar was that it's been kind of stuck. And I can't actually tell you right now. Usually I can say I think it's going to go higher, or it really is stuck. I can just say that if it goes above 96.50, that's going to be very positive, and that'll suddenly, for the very first time, that'll be changing the monthly chart, because that monthly chart is also in a very big rectangle. And it made just a nominal new high. It made 100.39 back in 2015 at the beginning. And then later on, it was in December of 2015, it went 12 cents higher at 100.51 and then broke down. But that's leg C. And usually the dollar has major moves. It doesn't just trade in. Once a trend is in place, it stays there for a long time in currencies, because you haven't got mutual funds, you've got countries that are putting money behind whatever it is.
Sure, big trends.
So,
I hear you.
So this is still stuck in a trading range between 92 and 100. But if we start to get into the high 96s, there could be another move towards the upside. So I'm going to watch the dollar.
From the just going to oil again, from a fundamental perspective, it's interesting. I was listening to either CNBC or Bloomberg this morning coming in. I was listening to both. And they were talking about the Chevy Volt, I believe, that they were just talking about. That's coming out, their new model. And Chevy had put out, I believe it can get somewhere 230, 250 miles between the charge.
That is a big surprise to Tesla.
Yeah, and that's the next statement when they were talking about it, was that the new Tesla Model 3, I believe it is, that they're going to have coming out, that'll get about 215 miles or 200, it was slightly below what the Volt will get at a slightly similar price point. But man, in my head, I said to myself, I have a lease right now. I said, maybe when I get out of this lease in like 2 years, maybe that's the time that I will be able to buy a car that'll be fully electronic, and you get a nice.
I've got a friend who's been waiting since, I think it's now since Tesla first showed at the Boston Auto Show. That's every year in January. It used to be in October. Now it's in January. He looked at the car. He looked at the Tesla. He said, "I want one. I want one. I just want to show those oil companies what."
It's a surreal thought when just for how much. Oil we use on a daily basis in our cars, and I know there's so many more uses of oil and the demand and how it comes into it, but just from a fundamental perspective of like a retail customer ourselves, it's pretty amazing that you might never have to put gas in your car again as we get there in, that's current technology basically.
Well, this is a period of choice. And
yes,
you
definitely.
You can spend $130,000 on a car, but you can actually get a car that is not exactly the same, but does almost everything that you want for very, very much less. Yeah. And in fact, you can even get a car, if you go to the auto show and you look around, there used to be a period where you looked at a car that you had to pay for those little floor mats.
Sure.
Now, even the least expensive car has all the luxury features that you would want, and you can actually spend $20,000 and get a car that does everything you want. It might not
I
be.
agree. No, it's a competitive market, and there are great cars on the market between, whether it's $20,000 to $30,000, and there's so many more even below that are super reliable, great warranties. But there's so much value on the lower end, and then when I start hearing you can get a car for $35,000 to $37,000 that's fully electric, that you can just see that the ramifications that could have on a global oil market that has relied upon that demand.
My friend's eyes are expanding every time he sees the price.
Every time you fill up for gas, if there's a competitor's market out there with similar cars, why would you be paying for that gas every time?
Right, exactly.
That will come, and we'll laugh at the fact that
we can talk about the long-term chart as soon as we get back on oil.
That's interesting because that affects us all for sure.
Absolutely.
Okay, come on back, folks. Let's check out where the Dow is, down 185, S&P down 25, NASDAQ down 45. Come back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back. Basil Chapman, Tommy O'Brien. Dow is down 180, and we're getting a little bit of a bounce here in the markets. And Basil, I'm just going to talk about, we were talking about Steve Rhodes earlier with his candles, and Steve has a workshop coming up tomorrow night for Mastering Probability subscribers, the Ultimate Reversal Signals. So right now, you can sign up for Mastering Probability for only $49. and you get access to the Mastering Probability newsletter, Steve's daily newsletter, and you get access to his workshop tomorrow night, The Ultimate Reversal Patterns. All the information's right there on the front page of TFNN, and he'll be talking about a bunch of different patterns that he uses when he's writing his newsletter, trading the markets. And Steve, if you've ever been to one of his workshops, as you do, Basil, as we all do, but he does a great job in those workshops. In an hour, he crams a lot of knowledge for sure.
An amazing amount, and he has statistics to show the relevance of each instrument that he uses.
And it's
really
great, you know,
terrific.
like I love going to your workshops. I know you love going to a lot of the different workshops. We always give all the hosts, you know, access to these, and they always love jumping in there because, you know, you can always learn something.
We're always
I think,
learning,
right? You really can, looking at the market.
I think that's the fascination. How can one be involved in the stock market for decades and not be totally fascinated? I mean, I can't wait for Sunday night. You know, for the whole week. It's like, oh, where's the market? What's going on here? And nothing's moving.
It's nice
Everything's
that you
fixed.
get a reprieve on the weekends where you're almost forced to take a rest, recalibrate, you know, take a break from the markets having action. And yeah, everything starts back over Sunday nights, of course. And really, it's a factor, I think, too, of just kind of the world news and the market action. And we're at all-time highs, which, you know, being at all-time highs itself is quite a time to be watching the market as to what can happen as you approach those highs. And of course, the world fundamental type of, you know, you got a presidential election, you have the Middle East, right? You have oil.
There is always something to worry about. My expression is that the market, people say the market hates uncertainty. I say, hey, every single day the market loves uncertainty. It just hates uncertainty about uncertainty.
Okay, sure. Yeah. And there is always something that's you know, trying to be, whether it's the topic of the day, the story of the day, the news that the market's awaiting, right? The news that the market's anticipating, whether it's the Fed,
Absolutely.
Jobs numbers, elections, you know, Middle East summits, unfortunately wars that are going on. I mean, et cetera, et cetera. Right. It really is an endless battle for sure.
So I'm just showing you a chart here. This is oil, which made it from early yesterday morning. That was the 12th. Yes, it made 6 peaks to the upside. That's peak F in the Chapman Wave, and then it came down. This is exactly the same as the E-mini I was showing earlier, and this is the 10-minute chart. And then it comes all the way down, and then this is what I want to explain to you. So it goes peak A, B, C, and it goes a C minus because it took out the left side low of 45.05 that was made at 10 minutes to 6 this morning Eastern time. But this, you remember I was speaking about that single leg A up?
Yes.
And this is kind of the same thing that happened this morning from about 8:30 on.
And quite a move, right? Up there and then just down.
Anyone trading it, 45 to 45.70, what was that, 45.74?
Yeah, dollar moves almost in each direction. It's 80 cents, yeah.
And that's like what I call an Eiffel Tower. It goes straight up, straight down like an uppercase A. The reason why I wanted to show you that, get out of that, is that we had the same thing in crude oil back in 2008. And that high that was made, and if you remember, there was just everywhere you looked where people were talking about oil.
I do.
And it makes its high in July 2008. And then that's one of the sharpest
moves. And I remember the bottom,
commodity.
too, of February 2009 when it was just so low. And that was, I mean, my dad and I talk about it. It's interesting looking at the fundamental difference because when it reached that low, I really thought that, you know, it was going to climb back up, or, you know, but this time I think it's different because of the different electronic cars, and oil's in a different environment right now.
Correct. And not only that, there was a percentage price movement that went from when it was back in the 200 area to down towards that 82 back in February. And remember, February is 1 month before the general market bottom. So this was giving you hints. And in 2008, it also topped. The market topped in October. This topped in July. So this is like it's ahead. It's foretelling us. It's foretelling what could be happening. So now that you remember the H pattern that we were looking at, we've got the same large H pattern goes to a large M pattern. The little lines that you see, because this is a continuous contract, my letters move around. I have to keep adjusting them, but the letters. Nothing changes other than the price has moved. And then what happens is it comes all the way back down. But this is a chart that's suggesting, yes, you could have a trading range in crude oil, but the major trend is down.
Yeah.
As far as I'm concerned, there could be things, and we never know what happens, Middle East and all that.
Yes, definitely.
There's just too much. There's a glut of oil. Not only that, when you get a glut of oil and you have competition, like you've got competition for yields to push them down, so you've got competition for oil. All these countries have been spending like crazy. Now they've got to prop the price up because they're still paying the same thing for whatever it is they're getting, but the price of oil is lower, so they're going to say, I need to sell more. And I think that's what creates the glut. Now, at the very time when they need it most, you get competition, you get windmills, you get turbines, you get batteries, you get all these other things.
And you have all these wells that have just been turned off that can be turned back on every time that it's going to rise. You're going to meet that, there's going to be extra supply that will be turned back on as it approaches levels where those wells become profitable.
Very good point. And that means that the competition for oil suggests that unless there's just a major, a dozen oil wells get blown up or something, hopefully nothing like that happens, that would be creating a completely different scenario. But at this point, just based on fundamentals and the chart pattern, I would suggest to you that, yes, you could get your spikes into the 50s. You could even pop to 55, 60, but the major trend is down. And that's really important.
In reality, over the last, whether it's the year, or 6 months, 2 years, whatever it is, I just recall many times where we've had some Middle East scares and, of some serious news of whether it's, terrorism, whether it's just war. And the oil contract has not got any substantial movement to the upside when in reality, in previous years, similar news would have caused much harsher spikes to the upside for that fear element.
Correct.
Coming in.
And even more importantly, if you look at what should be benefiting, we saw the transportation index. This is coming back to the market, but I've got a peak E in the XAL, which is the ARCA airline index.
Okay.
And if there's a major, something's going on because airlines and transportation should be doing way, way better with oil in this range, right?
The cost of that.
So that's saying to me that there's probably, I would not be surprised if we would find that at this particular point, we're actually, I've been calling it a rotational recession in different sectors. We saw that in the IBB. We've seen that in the utilities, and they keep rotating. And then all of a sudden, when one sector is just finished going down like oil, it had a bounce, a really strong bounce, but it's a bounce nevertheless. So I'm thinking here we're probably in a little mini recession right now, and that the market seems to be telling us that it's just run out of energy and it needs to regenerate energy. I think that's the way I'm looking at it. And you can see these strong downtrend lines in the airline index. Says at 91.65, it shouldn't have a problem going to 95, and yet it can't do it. So it's telling us something's going on.
If oil is at $45 and they're struggling, that's something to keep on your radar for sure.
Right.
Okay, folks, we will be right back in 3 minutes. The Dow continues to hold at about down 180, S&P down 27. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, September 14th at 5 p.m., I'll be hosting a special one-hour event, The Ultimate Reversal Patterns. I'll teach subscribers how to identify and trade market tops and bottoms. You'll learn Tom DeMark's TD Setup, TD Sequential, and TD Combo. Plus, I'll show you how to identify Gartley buy and sell patterns, which means you'll learn how to master the D point of any A to B equals CD pattern. More importantly, I'll teach you the most powerful pattern of all, by price relative strength divergent pattern. These patterns work for stocks, for ETFs, future contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes Wednesday's Ultimate Reversal Patterns webinar. This $49 offer is only good through September 14th, so act now. At only $49 for your first month, I guarantee this is an investment that you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Basil Chapman, Tommy O'Brien, the Money Masters on TFNN. And make sure to stay tuned today with all the market action as the market's spiking down a little bit. Dow down over 200 points now. So, Basil, what are you going to be looking at for the Tiger Technicians Hour coming up at 11 a.m.?
So what I'm going to be discussing is that there are some techniques that we've been using which are really quite simple in identifying, in other words, the Chapman Wave looking for a peak D or an E to start a sell signal that could go to a sell mode, how I use the MACD and the stochastic, and then I want to run through some of the different sectors. And then also, if you look at using the Chapman Wave, one of the reasons why I got so cautious is if you're looking at Google made a little double top in the monthly chart. And I'm looking at, it's Alphabet, they call it. I've had a terrible time calling it Alphabet. I call
As
it
with
Google.
most, for sure.
And wait, it looks like it's something's going on here. Why are my letters all something happened
Okay,
here?
yeah.
But anyway, it's the same thing. We've gone to the peak D in the monthly chart. The high was at 789.87 on this in February of this year, and it went to 789.75. 75 means it missed by 4 cents or something like that, making a new high. But that essentially looks like a double top, and it says to me, even a stock like Google, if you look at the, they use the acronym FANG, that's Facebook, is Amazon,
Netflix,
and
sure,
Google.
the big ones.
The big ones, you can see Facebook has had a fabulous move. It's gone to E in the monthly. It's in a G/B
Quite
in a
a
weekly.
monthly chart there, but go ahead.
And look at that monthly chart. If you had bought at any particular point, this is like Apple used to be. If you bought Facebook from the moment it broke out,
literally.
above in July of 2013, above, what was that? Let's call it above 32. It hasn't closed yet below the 9-period exponential moving average, that black line.
I mean,
But
just
I think
fundamentally, from the way that they've monetized social media, they've defied, obviously, all expectations by a long shot.
Which for many people, I think, was a surprise because
Yeah,
Zuckerberg,
nobody knew. I mean, it's really hard. We've seen social media in terms of, we've seen the MySpaces of the world dominate in terms of interaction for a brief period of time, but turning that into billions of dollars of revenue is another story.
Well, that's the one thing. The other is that Zuckerberg has been untried. This is the first time. He's always shown to be a brilliant, both marketer and a brilliant intra-business. He's almost like Steve Jobs in that he doesn't let anything rest, it looks like.
Sure.
But he had never done it financially. I mean, in other words,
it's a
this
different
is the
deal,
first real test.
turning it into when the market demands revenue on a quarterly basis.
And that's what he seems to have done. So this chart is really very strong. It's one that I would love to come back down towards. It's 127, hit a high of 131.98 the other day, and it's now pulling back. If it can sort of settle into the high teens, the 117 area, 118, I think it's worth looking at it again if the market's starting to find a bottom, because I think the leadership in the next phase up will come from the stocks that have been held most successfully. And Amazon, we'll see, because we've got the season coming up, and it too is still looking very, very strong technically. So I think Amazon and Facebook are stocks that you've got to keep your eye on.
They continue to beat every single quarter, and just from and you want to keep. I like to keep a fundamental perspective of things, and from a personal perspective, we market on Facebook, right? And guess what? I buy things endlessly, whether business or myself, on Amazon.
Amazon, right?
For sure,
right. And there's a reason for it, and the reason is convenience and speed.
They do a great job. They deliver value, right? They deliver value. That's the job of a company, and they get it done. Okay, Basil, thanks so much. I appreciate it. We look forward to the Tiger Technicians Hour at 11.
Thank you very much, Tommy. Always enjoy it.
Definitely.
Have a great day.
Stay tuned, folks. Swim lessons at 12. Dave White, Steve Rhodes, and then I believe we got Larry Pezzamento at 3 o'clock, and Steve Rhodes at 4, covering for my dad. Thanks. Take care. We'll talk to you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.